Welcome back to the channel, or welcome to the channel if it's your very first time here. My name is Troy, and on this channel, once a month, I document our journey towards an early retirement through dividend investing. August continued our streak of daily investing and brought a whole new wave of passive income across all of our accounts. In this episode, I'll cover the stock we completely sold out of, what we bought instead, how much passive income rolled in, and how our portfolios continue to compound. We'll also take a look at how all that activity impacts our dividend snowball and our projected annual income. But now, let's go ahead and jump into the cash deployed tracker to see how August treated us. August was another strong month of consistency and investment. I put a total of $3,969.61 to work, hitting all 21 out of 21 trading days for the month. That brings the year-to-date total invested to $27,471.18, keeping my monthly average right around $3,433.90. At this pace, I'm on track for about $41,206.77 invested for the year, which would be my best yet. My investing streak is now at 164 out of 165 market days, with February 5th still standing as the only missed day of the year. Thanks to the perfect month in August, the streak is now up to 142 consecutive days in a row. From here, let's roll into the total portfolio value and see where all this consistency has taken us. At the start of the year, our portfolio was valued at $341,885.84. We closed out July at $374,191.60, and August kept the momentum rolling. By month's end, our portfolio hit a new all-time high at $386,582.54. That's an increase of just over $12,000 month over month and a total climb of nearly $45,000 since January 1st. This marks 4 straight green months in a row, powered by steady contributions, dividend reinvestments, and a strong market backdrop. With the value side looking solid, let's turn to the activity side and go through the buys and major sale completed in August. Right here's a look at our August buys. I'll give you a second to check out the chart on the screen. It shows all of our individual stock and ETF activity across all accounts this month. Now, in total, we actually reduced our share count by 12.7355 shares this month due to selling completely out of Apple. I made this move because while Apple is far from a bad investment, I feel their growth potential and innovation edge has slowed. My focus right now is on companies that are beating the market and raising their dividends rapidly. The position we added in its place is one many of you will recognize from the channel, FIX, aka Comfort Systems USA. I love this company for its strong long-term outlook, past performance, competitive advantages, and impressive dividend growth. In total, we deployed that $3,969.61 this month and still added $20.84 in projected annual dividend income, even after losing $74.51 from Apple and gaining $44.52 from FIX. Brick by brick, we continue to shape the portfolio for growth and income, even while making strategic shifts. Speaking of income, let's zoom out and see what these changes mean for our projected annual dividend income going forward. We started 2025 with a projected annual dividend income of $2,673.57. By the end of July, that number had grown to $3,003.56, just over the $3,000 mark. Now, as of the close of August, we've jumped to a projected annual dividend income of $3,931.72. That big increase is mostly thanks to the S&P 500 fund in the wife's 401k being swapped out for a new fund that actually pays a dividend, a nice little boost to our income projections. Breaking down that yearly number, that's about $327.64 per month, or $10.77 every single day. Money quietly compounding in the background. It's proof that consistent investing, reinvesting dividends, and the occasional portfolio adjustment really add up over time. Let's see how that played out with the actual dividends received across all accounts this month. August brought in 6 dividend payments and 6 interest payments on idle cash across all accounts. 3 of the dividend payments and 1 interest payment came from the ACI portfolio. I'm not going to dive into that here since that portfolio has its own series here on the channel, but I'll link the latest episode on the screen for anyone interested. Quickly running through the other payments. Apple, for the last time, paid us on August 14th for $18.70 in the Retire Early taxable account, bringing the final total from this stock to $113.89. Costco sent us $24.32 in the same account on August 15th for a running total of $213.62. And surprisingly enough, I managed to get into Comfort Systems USA, the brand new stock, before the ex-dividend date, so the first dividend hit on August 25th for $10 $7.74, the first of many rapid growing dividend payments we expect from this position. This month was a little slow overall, but at the end of the video, I'll share all of the expected income for September, and let's just say we'll be making up for lost time. All of this sets up perfectly to see the total income for August, how it compares to last August, and where it puts us so far in 2025. In total, August brought in $123.02 across all accounts. That's 44.8% lower compared to August of 2024. This dip was expected given the large portfolio changes we made at the end of 2024. So far in 2025, we've earned $2,289.59, and that includes 2 dividend payments already set to hit the account the Tuesday after Labor Day. This amount is chipping away at the total earned in 2023, and I'm excited to see if we can pass that milestone this year. As I outlined in the December or January recap, my primary goal for this year is portfolio outperformance of the market, thus making my portfolio and the cash in it work as hard for me as possible. With that being said, it still sucks to see that this year will ultimately be lower in dividends than last year, but if the plan works, it will 100% be worth it. With that in mind, let's reminisce a little and see how much dividend income we've generated since the very beginning of this journey. Take a moment to glance over the full breakdown on screen. It's a snapshot of every dividend payment, reinvested share, and how our income has built up across all accounts over the years. So far, we've earned a total of $12,781.12 in career dividends, plus a little over 114 shares purchased for free through the drip. Those are free shares that I didn't have to spend money on, yet they still generate both capital appreciation and future dividend income. It's this compounding effect that powers the dividend snowball and accelerates progress towards new milestones. Now, let's dive into the charts showing our dividend snowball and see if it's picking up speed since last episode. For this month, we don't have any updates to report on for either of these charts as we're sitting firmly in between both milestones, sadly enough. The good news is I'm expecting next month might be a bit more exciting, with the possibility of updates to both charts. Fingers crossed we can make up for this brief lull. Even without new milestones, the snowball is still rolling, slowly but surely building momentum. Now, let's shift gears and take a look at how the portfolio is diversified across all of our holdings. On the left side of the screen, you'll see a pivot table combining all holdings from both Tia's accounts and mine, giving us one consolidated view of the full portfolio. To keep things simple, I've grouped similar holdings together. Instead of listing every ticker, they're labeled by category: S&P 500, SCHD, mid-cap ETFs, leveraged funds, and so on. This makes it easy to see where the money is going without getting lost in the details. Each row shows the group name, the amount invested, and its percentage of our total portfolio. And at the bottom, you'll notice the grand total of all invested capital, $305,806.55, a new milestone crossing $300,000 invested for the very first time. Over on the right, the pie chart visualizes this allocation. Here's how it breaks down: 40% in the S&P 500 or tracking funds, 15% in mid-cap ETFs, 7% in SCHD, 7% in leveraged funds like TQQQ and UPRO, 5% in high conviction dividend growers like Costco, Fix, Microsoft, and Visa, and the remaining 19 positions make up 11.34% of the portfolio combined. Again, this is based on invested capital, not market value. Focusing on invested dollars, the money we can actually control, is far more meaningful than letting day-to-day price swings dictate our view. Now that we've seen where the money is allocated, the big question is, how is it performing? Next up, we'll compare this portfolio to the major indexes, both short and long term, to see how our approach is delivering. In August, only one of our accounts, the ACI portfolio, managed to outperform all 3 major indexes. Still, every single account finished in the green this month, which is always great to see. Looking at the year-to-date numbers, things get a little bit more exciting. 3 of our accounts are currently beating all 3 benchmarks, and some are doing so by a wide margin. For example, the ACI portfolio is up 15.97% year-to-date, and our HSA is close behind at 14.83%. Both are easily ahead of the best performing index, the NASDAQ, which is sitting at plus 9.79% year to date. I'm especially curious to watch how the recent move from Apple to FIX impacts these performance numbers over the coming months. Portfolio changes like that may take time to show their real effect, but they can be real difference makers over the long run. At the end of the day, short-term performance is nice, but what we're really focused on is building lasting wealth and income streams that don't depend on where the market happens to be month to month. Speaking of income, let's shift gears and take a look at what's on deck for September, because no matter how the indexes perform, those dividends just keep rolling in. Looking ahead to September, things are about to get busy. really busy. We're expecting what has to be a record, 21 different dividend payouts lined up, and it's not even counting the regular interest payments. After a relatively quiet August, this month is all about seeing just how high our passive income number can climb to close out Q3. On top of that, we'll be watching to see if the market gives us another strong month of capital appreciation, which would be the perfect way to set up the final stretch of the year. August may have been on the quieter side in terms of passive income, but we kept stacking days and building good habits that'll have an impact for many months and years to come. Now, all eyes are on September, where things really pick up with a packed payout schedule. I'd love to hear how your portfolio treated you this month. Steady like mine, or did you get some surprises? Let me know in the comments down below. And if you're new here or missed it, check out my Anyone Can Invest series right here. It's all about building a dividend portfolio from the ground up. But until next time, see you.